In this video, I will show you how to correctly draw support and resistance lines. Support and resistance are the most important concepts which one must master when trading. If you are mastering them, then you are automatically increasing your winning chances. Now before I jump onto how to draw them, let me first give a quick explanation on what is support and what is resistance to all newbies. Whenever the price touches a level, before reversing back, these levels are said to be as support and resistance. This is the low which the price made before it reversed back. So this will be the support level. This is the high which the price made before going back, so this will be the resistance. In simple words, support is the bottom line where we see the price reversing and going up, whereas resistance is the top line, where the price reverses and goes down. Support is like the floor, and resistance is like the roof. So if we know the support and resistance, then we can predict in what direction the price will be going next. Whenever the price touches the support level, we expect the price to reverse and go up. So we take long position. When the price hits resistance levels, we expect it to reverse and go down. So, here we take short position. There are three most widely used ways to draw support and resistance. First one is by considering the recent levels. We consider the recent support and resistance levels as our current support and resistance levels. This is the most recent high which the price made. And this is the most recent low the price made. So this is the resistance and this is the support. We extend them and make them our current support and resistance levels. Now, the next question is, do we take the trade whenever the price hits support or resistance levels? Of course not. Whenever the price touches these levels, we wait for some time to see a reversal in price. When the price start to reverse, we enter the trade. Here the price touched the resistance, and then it started to go down. So we exactly enter the short position somewhere here. Here, the price touched the support and started to reverse. So we take long position, somewhere here. Remember, we enter the trade only when we see some sort of reversal in price after touching the key support and resistance levels. Now, this way of drawing support and resistance levels considering the previous levels works best in ranging markets. When the market is going nowhere and is just swinging between key levels, we use this method. But what if the market is trending? How do we draw the support and resistance in such markets? That brings us to the second way of drawing support and resistance levels, which is by identifying the trend. As we all know, the price can trend in two ways. Either it can go up or go down. Whenever the price is consistently moving up, we say that we are in an uptrend market. And when the price is consistently going down, we say it as a downtrend market. In an uptrend market, we see price making higher highs and higher lows. The areas where the price is making higher highs are the resistance levels. And the areas where higher lows are made are the support levels. Contrary to this, in a downtrend market, the price makes lower highs and lower lows. So these will be the resistance, and these will be the support levels in the downtrend market. In a trending market, using the previous 5 support and resistance levels as our data points, we connect dots and draw our current support and resistance lines. This chart is an uptrend chart, because we see price going up. So here, we draw support levels at higher lows, and resistance levels at higher highs. Once we draw these levels, we then connect them by drawing a line. Whichever line has the maximum number of support levels on it, we consider that to be as a valid support line, and whichever line has maximum number of resistance levels, we consider it to be the valid resistance level. These 3 support levels are aligned on a single line. The other 2 support regions are on a different line. So this will be the valid support line, because this has more number of support levels on it. We extend this, and consider this as our current support line. These 3 resistance levels are aligned on the same line. So this will be our valid resistance line. Remember, we need to at least have 3 or more key levels aligning on a single line. If we are not able to get 3 or more key levels on a line, then we go with considering 1 more previous support and resistance levels. If last 5 are not enough, then consider last 6 support and resistance levels. This is our support line and this is our resistance line. Whenever the price touches this support line, we can expect it to reverse and go up. The price touched the line here, and it reversed back. So we enter the long position, exactly here. The price touched the resistance line, and started to reverse. Here we enter a short position. Now, we follow the same rules in the downtrend market. We see price making lower highs and lower lowers. These will be our resistance levels and these will be our support levels. We then connect them and see which all can be aligned on a single line. These 3 can be put on the same line. And these 3 can be on the same line. Rest all are not making any connections. So this will be our support and this will be our resistance. The price touched resistance and reversed back. So we take sell position here. The price touched the support line and started to reverse, so we take buy position here. Professional traders take both kind of trades, long and short, in both types of markets. But if you are a beginner, then I highly suggest you to take only long trades in uptrend market, and short trades in downtrend market. Whenever the price touches the support level in an uptrend market, take long position, and when the price hits resistance in the downtrend market, take short position. The reason why I say to take trades in this way for beginners is, for a newbie it becomes very hard to catch the price in both sides. So even if you are making mistakes, the chances of winning a long trade in an uptrend market is very high, and the chances of winning a sell trade in a downtrend market is very high. So to mitigate the risk of losing, you can go this way. Now we have understood how to draw the support and resistance using the previous levels, and by knowing the trend. The third way is by knowing the psychological price points. Always, traders have a mindset of putting buy and sell orders at some fancy numbers. Numbers which are multiples of 10, 50, 100, 1000, or numbers like 333, 777, 888. Any number, which looks a little special, have some sort of psychological impact on traders' mind. Here, we can expect that many people would have put sell order at $1, and many people would have put buy order at 90 cents. So whenever the price touches the $1 mark, the sell orders would automatically get executed, thus making the price to fall. So this will become our resistance level. And when the price touches the 90 cents mark, the buy orders are instantly executed, thus making the price to reverse and go up. So this becomes our support levels. So whenever the price is trading near such fancy numbers, it's better to draw the support and resistance. So these are the three most simple and fundamental ways of drawing support and resistances. Now, one important point to remember is, in some instances we see that the price not respecting the support and resistance levels. Even after touching the support or resistances levels, the price continues to go its own way instead of reversing. Such situations where the price does not respect the key levels are called as breakouts. So this is the reason why you should not enter a trade exactly at the support or resistance levels. We should wait for some time to see the reversal in price. Once we start to see the reversal, we can enter a trade. Now, you might ask that, what is the point of drawing support and resistance if the price is not going to respect them? Please understand that, out of 100 trades, we may come across breakout situations only 20 to 25 times. Rest 75 to 80 times, the price is going to follow the support and resistance. So that is why we should never miss out on drawing support and resistance lines. In a breakout situation, if the price breaks the support and continues to go down, this support level will be our new resistance level. On the other hand, if the price breaks the resistance and goes up, then this resistance will become our new support level. So this brings us to the end of this video. Don't forget to hit that like button below if you enjoyed watching this video. And if you want me to cover some more ways of drawing support and resistance levels, then do let me know in the comment section. And also I have got a video on candlestick pattern, where I have explained all the new key concepts on how to read, understand and take up trades using candlestick. Click on this to watch the video.